Hello, we're looking at Palantir Technologies today. After a couple of years where it seemed like nobody could get away with not talking about Palantir, things have been kind of quiet. Let's dive in so that your wisdom can blossom. There is notes from the auditors complaining about this company's revenue recognition practices. Revenue really is the foundation for everything a company does, so that's a particularly sensitive thing for the auditor to be complaining about. Let's just sit back and enjoy. This is a current ratio of almost 6, and overall a total assets to total liabilities ratio of more than 4. This is heavily defensive with this massive amount of cash on hand, over $2.5 billion in cash on hand. However, when we tick down to the accumulated deficit, that is, yes, approaching $6 billion in money that has been taken from shareholders and not returned. That puts into perspective that even though their cash on hand is massive relative to the business that they have, it's only about a third of all the money that investors have provided. It was a very hot company to talk about just a couple years ago. Interesting that Palantir is running a savings account here so far. Income statement. Despite me teasing them because of having so much cash on hand, they are generating revenues approaching $2 billion annually. We did hear a little bit of complaints from the auditor, which we didn't look into yet, but we've got a healthy gross margin, certainly above 70%. Much less healthy is how high these operating expenses are. Yes, this company is losing money every year. They're losing hundreds of millions less than they were just 2 years ago. 2 years ago, at the height of their popularity, they were losing over $1 billion a year. I mean, most of this is boiling down to this high level of sales and marketing. Statement of cash flows. Now here we get into what's really going on. Investors are putting faith into whatever it is this company does, and then this company is paying out hundreds and hundreds of millions of stock-based compensation. That might be necessary. I'm sure Palantir believes that their employees are worth it, and that the only reason they have a shot in this industry is because they have such top talent that requires stock-based compensation. Investors have given it $5.8 billion over its entire life. $1.2 billion was paid out just in this one row in 1 year. Looking at the working capital management, you should have the kind of instinct that all these numbers, before you even get into the details, are all significantly smaller than some of these numbers. The main takeaway of our opening move is the actual business is way smaller than some of the things suggest. This company has raised a lot of money, has kept close to half of it just as cash in a savings account. More importantly, we're going to try to gather some facts about why is this business so tiny compared to what the company could be doing? Why are they restraining themselves in terms of not using that cash? They're not even confident enough to give a real description. I mean, this is particularly vague. Company deploys software. Okay. What is the Palantir software? Well, the CEO's office is saying that they generate revenue from sales of subscriptions. There are 5 steps in making a sale for their subscription services. And so it's not like the sort of subscription services that a lot of us would be familiar for if we're just a single customer. I mean, Palantir sells to very, very big companies, and so they essentially make custom or bespoke subscription services depending on the specific needs of the giant enterprise client. First, they essentially do a little bit of consulting, then they get paid according to what the contract says. And they're saying that they try to make all the contracts have a couple things in common. First, usually their contract involves some sort of subscription fee. Now, once someone's onboarded to the cloud that they sell is loaded up with certain functional intellectual property. However, where the operations and maintenance and where the extra fees start to come in is that they only allow you to get updated versions of this functional intellectual property if you pay fees. Critical updates, support, and maintenance services are additional fees that they charge their customers. 56% of their customers are in the government. Average revenue for the top 20 customers is just under $50 million annually. Okay, now we're getting a bit more juicy. Hey, if you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe. Note 4 to the item 8 reveals that Palantir has actually been a bit bold in hiding money market funds in the cash and cash equivalents. Since they do this, this is essentially saying goodbye to your money for several months, perhaps even years, to get what the money market funds would claim is a good return. As I've said in multiple videos before, particularly the starting guide, my view on this is that if as an investor I wanted to buy money market funds, I don't need Palantir to act as a middleman for me. I can just put my money in money market funds alone. I certainly don't need to think that I'm buying a hot tech stock and then have that hot tech stock put more than a third of all the money investors have collectively given it into a completely different thing. It's pure middleman shenanigans. However, there is a side, and if you want to know more about why a company might do this and think that it's a good thing, definitely look at that starting guide. Now, Palantir's CFO department is getting a little bit excited here. They clearly are devoting a lot of time and energy into creating the beginning of an M&A machine. And so they want to start using some of that big money in order to be investing in investments. There is not really a ton of more detail around what is happening other than just these entity names. However, all of these are publicly traded securities. It was when they received those billions and employees in Palantir started focusing on setting up this mini investment fund that they're looking at, that the stock-based compensation really started to kick off. In fact, most of these very, very high stock-based compensation numbers we see are actually not related at all to software. Stock-based compensation related to research and development, their software business, is declining. Stock-based compensation in general and administrative is maintaining roughly the level that was brand new for it as back as 2020. Unfortunately, we can't see even further back, but from the descriptions in the paragraphs above, it really does seem like this is not going to necessarily go down as long as the company continues to find it beneficial for their employees to focus on making stock investments. They're calling that general and administrative. So Palantir Technologies arguably given way more money than it knew what to do with. Certainly the way more money part I'm pretty confident in. They were given billions and billions of dollars a couple years ago, kind of just because their name essentially randomly became a hot stock. And so they took advantage of it to squeeze money out of public markets. That's not bad at all, but what have they done with that money? Mostly put it into money market funds, which we can think of as just slightly better than a savings account. Taking their time to think about what to do with this money. And again, it's not bad to think through what you're going to do, especially with an opportunity like this comes in. But it's been years, and as the years tick by, increasingly it will become a little negative for Palantir to not return that money if they're not going to do anything with it. So what are they going to do with it? Well, start telling their managers to give less stock-based compensation for building software, which is what got Palantir popular in the first place. Start focusing on creating investments in public companies, effectively pivoting Palantir increasingly away from running software, creating software, and more towards becoming an investment fund that isn't necessarily being pressured to do all the regular market risk controls that investment funds typically have to do if that's just straight up what they say they are. At best, this company is going through a period of confusion. They'll figure it out. They'll have a very strong investment fund, maybe even a very successful investment fund, fueled by a decent software business that has a couple hundred very high quality, huge clients. Certainly a very good position to be in 10 years down the line if they can pull it off. Usually the investment funds that do well when they were started as investment funds. It's interesting because the risk here is a group of coders and salespeople, let's just say what it is, ran into so much money that now they're fancying themselves a bit of an investment fund. Now, is that really the DNA of the investment fund you want to invest in? I'll leave it up to you. Please like and subscribe. Take a guess before I reveal whether the Sage Seeds AI is going to rate this highly or rate this low in the 2022 season. This ranking is a valuation ranking, and this channel is all about helping us unlock an intuition through practice. Based on the story I just told you, is this secret value or not? Sage Seeds AI ranks Palantir as 241 out of 284 in value for the 2022 season. This is quite a low ranking. I'm going to interpret what's going on. It's very difficult to be value when you've lost money every year. Now, some companies claim that they're losing money because they're doing some tax thing. It would be tough to believe Palantir, based on its financials alone, that it is losing money on purpose. This company is just straight up losing money. If they were creating a second business, this investment fund, after having a profitable software business, this ranking would most likely look completely different. But the Sage Seeds AI is really putting some negative correlation to the fact that a business that could not become profitable, already pivoting in a big way, just means complexity on the financial liability side. And what Palantir essentially has going for it is the fact that investors gave it a lot of money. Everything else is at best neutral, and there's even an increasing number of negatives year after year after year in terms of the financial commitments of this company. It hasn't figured it out. Palantir very much looking like an adolescent company. And as we all know, some adolescents get it out of their system and then go on to live wonderful, productive lives. But you don't necessarily want to give an adolescent the keys to your savings account. And that's what the Sage Seeds AI is seeing. This is not value. Not this season, at least. Thanks to everybody that watched until the end. Share your wisdom, share this video.